Alright guys, good morning. So for this video, I'll be discussing problems for chapter 7 for intermediate accounting, loan receivable. So let's go to page 193. So Global Bank granted a loan to a borrower on January 1 of 2020. The interest on the loan is 12% payable annually starting December 31, 2020. So after a year. The loan matures in 3 years on December 31, 2022. We have the following data: principal amount, the origination fees received from borrower, and the direct origination cost incurred. Okay, so the initial carrying amount of the loan. So basically, as what we've discussed, we will be deducting the origination fees received. So that's 5 million less 331,800, and direct origination cost incurred will be included. So 5 million less 331,800 plus 100,000. So we got 476,800. That's the initial carrying amount of the loan. So for page 194, let's prepare the journal entry. So to record the loan, so the loan is 5 million. So that's why we have to record it based on the face value or the principal amount of the loan, which is 5 million. Loan receivable, that is 5 million debit, credit cash of 5 million. Then to record the origination fees received from the borrower, we will debit cash 331,800. We will credit unearned interest income 331,800 to balance the entry. And to record the direct origination cost incurred by the bank, so we will debit unearned interest income 100,000 and cash, that is 100,000. So basically, if you have noticed, we are at the point of view of the bank, because that is a receivable since we granted the loan, and we received the origination fee. So that's why we debit cash, and that's why we credit cash, because we incur direct origination cost upon processing the loan applied by the client. Thus, the unearned interest income has credit balance of 231,800 since we already deducted 100,000, which will be amortized over the remaining term of the loan using the effective interest method. Because of the origination fees received and the direct origination cost, a new effective rate must be computed. So we have the initial carrying amount of the loan of 476,800 is lower than the principal amount. It means there is a discount. Yeah, there's a discount. Basically, the effective rate must be higher than the normal rate of 12%. So please take note that if the initial carrying amount of the loan is lower than the principal amount, the effective rate must be higher than the nominal rate, and vice versa. If the initial carrying amount is greater than the principal amount, we don't have a discount on that. We have a what we call forget the term. We have a higher amount compared to the principal amount, which will be amortized as well over the remaining term of the loan. So that's why we have computed the effective interest rate of 14%. So amortization table, effective interest method. So we have the columns for the date, interest received, interest income, amortization, carrying amount. So the carrying amount is 476,800. How did we so that's the initial carrying amount. Then how did we get the 600,000? So we got the 600,000 by multiplying the 5 million as the principal amount by the nominal rate. So that's the nominal rate, that's 600,000. While the interest income, we computed that one based on the principal, the carrying amount, which is 476,800 with the effective interest rate of 14%. Again, the interest received is based on the nominal rate. The interest income is based on the effective interest rate, which is 14%. Then, just like what we've discussed in the previous period, the difference between the interest received and the interest income will be part of the amortization. Sorry guys, I already remembered. So when when the initial carrying amount is higher than the principal amount, we have a premium. So we don't have discount. Unlike with the problem that we are discussing right now, there is a discount because the initial carrying amount is lower than the principal amount. So there is a discount, that thus the nominal rate is less than the effective interest rate. However, if there is a premium, meaning to say the principal amount is less than the initial carrying amount. That's why in that scenario, the nominal rate is higher than the effective rate. Okay, so to continue with the table, amortization table, so since we do have a discount, so at the end of the term, we are aiming to get the carrying amount to 5 million. That's why the amortization will be added to the carrying amount of 4,760,200 to get 4,835,748. So on and so forth until the end of the term. That's why we got 5 million. Again, there are rounding differences. So there might be a possibility that the carrying amount will be 1 peso higher than the 5 million or 1 peso lower than the 5 million. That's totally okay. So again, it was mentioned in 195 page 195, I mean, that interest received principal times the nominal rate and the carrying amount times the effective rate. So let's go directly to journal entries because we already discussed this, how we compute that one in the amortization table that I've discussed. So we will debit on December 31, 2020. On the side of the bank, we will be debiting cash. We receive it from the client who or the borrower, and we will credit interest income. That's an interest income. And then since we will already do an amortization, so unearned interest income, it will be debited 67,548, and credit interest income, it's already an interest income, so it's already a deduction to the balance of 231,800. Then at the end of December 31, 2020, basically the loan receivable will be reduced. So 5 million, then unearned interest income, previously as mentioned, 231,800, since we already amortized that one, amounting to 67,548. That's for December 31, 2020. So we got the carrying amount of the loan. So that's the receivable from our end or from the bank's end, 4,835,748. Okay, so the carrying amount is actually the amortized cost because we already performed or we already did the amortization. Journal entries for December 31, 2021, same, cash interest income 600, then unearned interest income and credit interest income using the table of 77,005 pesos. And lastly, for December 31, 2022, we do have 3 entries because basically the loan receivable will be derecognized, or well, we don't have any loan receivable anymore by end of December 31, 2022. That's why we got additional entries, same for the 600 amount from the previous year and also for the unearned interest income. So for the last entry, we will debit cash 5 million, basically we already received that one, and we will credit loan receivable for 5 million pesos. Okay, so that's the first illustration for loan receivable. So, as mentioned, we already go over to the theory part when we had the discussion, when we did the checking for your quiz for this chapter. So, allow me to proceed directly to the second illustration, which is international bank loan. Okay, so International Bank loaned 5 million to bank card company on January 1 of 2018. The terms of the loan require principal payment of 1 million each year for 5 years plus interest of 10%. The first principal and interest payment is due on December 31, 2018. Bank card company. So again, the first principal interest payment is due December 31 of 2018, so after a year. Bank card company made the required payments on December 31, 2018 and December 31, 2019. However, during 2020, bank card company began to experience financial difficulties and was unable to make the required principal interest payment December 31 of 2020. So, by that time, International Bank assessed the collectability of the loan and has determined that the remaining principal payments will be collected, but the collection of the interest is unlikely. So, again, the borrower is bank card and the bank who provided loan is the International Bank. So the loan receivable is carrying amount of 3,300,000, including the accrued interest of 300,000 of December 31, 2020. International Bank projected the cash flows from the loan on December 31, 2020. So we do have the cash flows. So using the original effective rate, so we do have 10%. So let's do the trial and error. The present value of one is 0.9091 for one period, then 0.8264 for 2 periods, and 0.75134 for 3 periods. So we will multiply the projected cash flows with the present value factor. So I already told you, I already discussed it to you how to get this present value factor. So after multiplying the projected amount for December 31, 2021 up until 2023, we got the total present value of cash flows of 2,407,900. So basically, there is an impairment loss because the carrying amount is 3,300,000. The impairment loss is the difference between the carrying amount of the loan and the present value of cash flows. So since we have a lower present value of cash flows, definitely we do have an impairment loss of 892,100 compared after deducting 2,407,900 with 3,300,000. So we will recognize an impairment loss. So it's a loss, so we will debit it because if it's a gain, it will be on the credit side. So entering December 31, 2020 to recognize the impairment loss, so we have loan impairment loss of 892,100. So basically, the accrued interest that is receivable supposedly by the International Bank, that's the first one that will be covered by the impairment loss. So accrued interest receivable of 300 because definitely we will not be able to collect that one. Then out of the 3,300,000, the allowance for loan impairment is 592,100. So basically, the accrued interest receivable is credited directly because the collection of interest is unlikely. So that's why, since the loan receivable has a carrying amount of 3 million, because the 3,300,000 is already including the accrued interest, so the 3 million will be deducted to the allowance for loan impairment of 592,100. So the carrying amount is 2,407,900, and that is the present value, the present value of the cash flows. So the entry is to record the cash collection cash 500,000, then loan receivable of 500,000. That is for December 31, 2021 because that's the amount projected, the date of cash flow. Then to record the interest income using the effective interest method, that is 247.90 because 2,407,900, it will be multiplied by 10%. So 2,407 times 10 equals 247.90. Note that the recognition of interest income is charged against the allowance for loan impairment. Okay, so the interest income for 2021 is computed by multiplying the carrying amount of the loan by the effective rate. So we do have the effective rate. So we do have an effective rate of 10%. It was mentioned in the problem. So just in case you have question. All right. And the next entry for December 31, 2022, we received because we're expecting 1 million. So we have debit cash, credit loan receivable 1 million. Then to record the interest income because definitely we do have a balance already. So let's compute how we got 214,869. So here in the illustration, so we have the loan receivable of December 31, 2021 because the 3 million is the carrying amount of the loan and we receive 500. That's the expected cash flow for December 31, 2021. Basically, the carrying amount will become 2.5 million. And if you take a look, the allowance for loan impairment, it was mentioned that the interest income will be charged again the allowance for loan impairment. That's why the computed allowance for loan impairment of 592,100 will be reduced by deducting the interest income of 247.90 which we recognized the previous year. So that's why we got the allowance for loan impairment of 351,310. So the carrying amount by December 31, 2021 is 214,8690, which will be multiplied by the rate of 10%. So that's why we got the allowance for loan impairment for the year 2022 of 214,869. Okay, so that's the journal entry for December 31, 2022. And for journal entries on December 31, 2023, we also expect to receive 1.5 million. So cash, loan receivable, 1.5 million respectively. And since, let's compute again the loan receivable, the 2.5 million, so it will be reduced because we receive 1 million. So that's why we got 1.5 million. And the allowance for loan impairment, the remaining is 351,310. It will be reduced by deducting the interest income that we recognized last 2022. That's why we got a difference of 136,441. That will be the figure that will reduce the loan receivable carrying amount. That's why we got 136,3559 and the interest income of 136,356. So take a look. There is a difference of 85 between 136,441 and 136,356 due to rounding of present value factors. So that's what I'm talking about earlier. So there is really a big possibility that there's a little difference. So it's just okay. Okay? So that is for our second illustration. So I will cut this video so I can already upload it. So the remaining illustration I will prepare another video, but basically in terms of because I already prepared your semi-final exam and this chapter will definitely be part of the examination. So the illustration that I have already prepared, that is already sufficient for you to know already the concept. So since we don't have the luxury of time, guys, for the next video I will now proceed to chapter 8. So the concept of this chapter has been discussed already with the illustration that I've already discussed during this video. So just master the concept using the illustration at the book, and you'll be guided because there's already a detailed discussion here, and I'm just supplementing. I'm just explaining those things for you to be able I'm just simplifying those things for you to be able to get it. Okay? So for the next video, I'll be discussing chapter 8 already, receivable financing, pledge assignment, and factoring. Okay? So, thank you for watching this video and see you soon. Bye-bye.